Hi, this is James Shug with Westpac London's end of day report for Friday the 9th of March. The market's got off to a reasonable start today, perhaps an element of by the room itself, the fact at play, following the Greek announcement that they'd secured more than 85% support for their bond swap, their debt swap amongst their creditors, the private sector creditors under Greek law. Another 10% were effectively forced into the deal via the collective action clause. So just over 95% effectively took up the swap of the Greece's private sector creditors. This has meant that the EU finance ministers, who had a conference call today, have approved the 130 billion second bailout of Greece. The bond swap, the debt swap, was a critical part of that. Basically, it's meant that Greece has seen more than half of its debt written off by creditors, and in fact, for those creditors, the net present loss is something like 70% or more. When you take into account that they receive just under half the face value of the bonds they hand in the terms of the new bonds that they receive, and the maturity is much longer and the interest rate is lower on those new bonds. So that's going ahead. Now, our view is that the bailout won't be enough, that the economic assumptions that are factored into that aren't dire enough, that the economic meltdown that's we've seen in Greece, well, it's in its 5th year now, will continue, and that will undermine the efforts to cut the budget deficit in Greece, such that it won't fall enough for the bailout to be sufficient. So either they'll need the bailout to be expanded further or more debt forgiveness, and that just could be too much for markets to bear. I mean, to go through the torturous process, it took, basically it's now 28 months since Greece revealed its fiddled budget books back in November 2009. The first bailout was in May 2010, so nearly 2 years on, we've got to the second bailout after many false starts. To try and get a third, I think would be pretty difficult for markets to sustain, particularly if Portugal needs another bailout around the same time, as we think will be the case, and if other European sovereigns are slipping in terms of their budget deficit reduction too. But there's certainly been a lot of optimism this week about the debt swap, and although today markets aren't that excited, as I say, most of the positive reaction was already built in. The other big news today was a 227,000 increase in US payroll employment in the month of February. There were upward revisions too to December and January. The 3-month average pace, December to February, is 245,000. That's the highest we've had, beats anything we had early last year, and it's the highest since 2006. So further evidence that the US labour market really has built some momentum. There are some other positives in the survey: the 8th consecutive rise in the household survey measure of employment, for example, something that hasn't been bettered yet since the turn of the century. So several reasons to view that report as another sign that this upswing in the US economic data that we've seen over the last few months may have more legs than the one we saw in early 2011 or back in 2010. Also, the trade deficit for the US widened more than $2 billion today to $52.6 billion. Exports up 1.4%, solid. Capital goods and auto exports at record highs. But imports are up, for the 3rd month running, they're up 2.1% in January. So that more than wiped out that export gain. That's the highest deficit since late 2008. Canadian jobs down 3,000, with softness emerging in the labour market there. German exports up 2.3% in January, pretty much consistent with the stronger industrial production story we saw in January. Exports were down in December, so was IP, so there's a bit of a similar pattern coming through there. And that are the main news events of the day. So in terms of markets, at the close in Europe, we've got the FTSE up just under 0.5%. The French market up 0.25% today. The German's up 2/3%. The Spaniards down 0.3 and the Italians down 1.1% today. The Dow at US lunchtime is up 1/3% at 12,951. Commodity markets positive again today, so we've got gold up 0.64% at $1,709 an ounce. Oil, $107.74 a barrel, is up just over 1%, and copper prices up 1.7% today. Now, despite that, the Aussie dollar's lower. It's at 1.0592 at the moment. I was trading up above 1.07 not so long ago, so a day or so ago. So the main story there is a stronger US dollar. The US dollar really benefited, well, certainly from the payrolls numbers that came out 4 hours ago compared to when I'm speaking. So the US dollar is stronger against the yen, euro, Aussie. In fact, the Aussies outperformed some of those others. I mean, the Aussie is higher against the euro, but nevertheless down against the US dollar. That's about it. That's a wrap for Friday, a wrap for this week, and I'll be back next week.